Back to our channel. As always, if you are copy trading, you're an absolute moron and you deserve to lose all your money. And with that another way, we're going to speak today about M&T Bank Corporation, ticker MTB, trading at about just under actually $217. This particular trade is a short, and the reasons why we are looking at it now stand out, first of all, because of the price action, indicating that there is a good entry point here to go short. But of course, the analysis fundamentals is very, very important here. So in terms of what they do, they are a dominant regional player sitting at on about $162 billion in total deposits. Management has guided for an adjusted net interest income of 5.5 to 6.5. And the stock at the moment is incredibly cheap in terms of valuation, indicating that the market is not really chasing this stock. There's not much interest about it. So why is that? Well, the street is at the moment pricing in sluggish loan demand, completely ignoring the mechanical expansion in NIM caused by recent bear steepening in the 2-10 yield curve. But there's good reason for that. One of the things that is becoming more and more prevalent in terms of a risk in the financial markets is the prospect of a reflationary regime. So think about it. The last 2 or 3 years, everybody has been wondering about whether we're going to be in a no landing, soft landing, or if inflation is going to just stay with us forever. And there are good arguments in both sides, but the point is this. There are at the moment a lot of forces that are inflationary. So the tariffs, of course, and the energy, which, as we can see, if we look at where the XLE ETF is at, right, along with all the prices for energy, we can see that energy has been going down, going up for quite a while. And that happened just since the start of the year. So in the last couple of months, XLE has gone to about 44 all the way to 55. So that, of course, indicates that there are higher energy prices, and that is an inflationary force that should not be discounted. Now, when we're preparing our portfolio for scenarios like this, and especially when we have some tech names, perhaps long duration assets that are vulnerable to those kind of shocks, this is a short that would fit really well in terms of protecting us against that kind of scenario. Not only that, in terms of their exposure, they are, I think, it's the bank with the highest exposure in the regional bank ETF to commercial real estate. And at the moment, a lot of the loans in that portfolio are hitting a loan maturity wall this year. So, assuming that we remain in a higher for longer environment, or even worse, the Federal Reserve surprises everyone rising interest rates to tame inflation because of those energy pressures, inflation, perhaps some further escalation in the conflicts, that would have a devastating effect for equities, especially in the ones that are exposed the most. So this one is one that would provide us with very good shelter in that case. As I mentioned, they have that very high commercial real estate exposure, and the timing, as the price action suggests here, is crucial, really, in terms of how it can play out. So while the accounting profits in 2025 were at historic highs, and that's the reason why you see the company going up so much here, now the picture is quite different. You see that the leading indicators of business health, so NII growth guidance, employee headcount trends, and inside conviction, because management has not been buying any shares. As a matter of fact, they are selling, and they have been doing so for a while, are all pointing in the opposite direction. So looking at the probabilities, we can see that this is a bit of a perfect storm. Plenty of upside here with not much upside in this environment. So with that, this is an options position as a short that we will be entering very soon. Hope you enjoyed the video. See you soon.